into it. Dr. Sable, David, welcome back to Inside Reproductive Health.
Thank you, Griffin. Always a pleasure.
I went back to, I think it was episode 16 or 18. You were one of the, so 70 some odd episodes ago by the time this episode airs. And I went back this morning and I re-listened to it and reread the transcript because I wanted to have a different conversation. The other one was great, but people can go listen to that one. I don't want to duplicate it. And in doing that and in having heard you speak in other venues now, I understand more the delineation that I don't think I understood about your focus before, which is I often talk about, I think of Wall Street and I think of private equity, I think of consolidation. And in hearing you speak, you're more focused on scaling solutions that can get us up to a million cycles, at least in the US, as opposed to just a 250,000 and a smaller, consolidating a smaller pie. You're interested in ventures that scale that. Artificial intelligence might be one of those. So first, can we just set the stage with why scaling is the bigger picture and what opportunity is there? And then we'll get into AI.
That's a great question. From when I practiced, I remembered very well seeing a bunch of patients for first visits and thinking, boy, there's a good probability that they would get pregnant, they do very, very well, and we would never see them again. And one of the reasons was because the out-of-pocket costs were high. And just going back to, my first year college economics and the relationship between supply and cost, and it just gradually occurred to me, it took years, I should have figured this out earlier, that, the IVF industry is, it's selling a very, very high quality product at a relatively high price. And when you cross that with the number of people that suffer from infertility, plus the number of people that in theory could be benefited by doing IVF to prevent genetic disease and fertility preservation for oncofertility, we're looking at just treating a small fraction of the people that we could be helping with a procedure that's really good, that's been around for 40 years, that we know is, done properly, is very safe. So going back and studying other industries that, were in this position and you had to scale up, one way of scaling is just to keep replicating and making more of what you've already got. That's not so easy with IVF because, laboratories are expensive to build. Physicians and scientists, are very well trained and very good at what they do. So one of the things that we need to do is, kind of rely on some technology to do that. Just to give an idea of the scale of the problem, any piece that you read about infertility in the United States, for example, usually quotes somewhere around 7 million people with infertility. And in 2018, using IVF, which is really by far our best treatment for infertility, we created 74,000 babies. Now, every one of those 74,000 babies is wonderful and a miracle and is a result of great work by the industry. But that's less than 1% of the people with the problem. And I would challenge anyone who works in healthcare to come up with another area of healthcare where the number of people we're helping, or the percentage of people we're helping, is that low. So that was kind of our starting point. So back in, over the past 10 years, I've kind of looked at, all right, well, where are the bottlenecks? What's keeping people from coming into the industry or accessing the service? And that led me to study other countries and look at the per capita usage of IVF elsewhere, and even look at other industries and say, well, what fueled scale there? And that's kind of brought me to this focus on innovation capital, and tools like artificial insemination. Excuse me, artificial intelligence. Once an RE, always an RE.
That's right. That's been pioneered. Artificial intelligence is one of the technologies that can scale. But let's identify those bottlenecks that technology might be able to solve for before we talk about the technology. I'll let you decide, lab or clinic bottlenecks, to talk first, but what are the bottlenecks?
Yeah, let's talk about two. First investment we made with the venture fund was into cryo storage. And people may know the company Tomorrow Life Sciences. It's a company that is tackling this problem. And, it's one of those things that gradually crept up on us. Like when I started doing IVF in the late 1980s, early 1990s, just about every embryo that you made was used sometime during the cycle or was disposed of, discarded at the end of the cycle. We weren't very good at freezing things, and it was not a problem. Over time, we started freezing embryos, usually at the cell stage, and maybe we would put back 3 or 4, and maybe we'd have 1 or 2 or 3 or 4 left to freeze. Typically done manually. We would use dewar tanks and liquid nitrogen and label the specimens, sometimes by hand, and there'd be a clipboard hanging on the wall. And it was adequate. The solution for storage and tracking and quality control was appropriate for the volume that was going through. Fast forward to now, over a couple decades, and now we're putting back 1 embryo at a time. We're making many more high quality embryos per stimulation. We're doing egg freezing for proactive fertility management, and the number of specimens has just proliferated. So you go to other IVF programs, you go to big high volume programs, and the number of dewar tanks, these kind of tanks that came out of agriculture, are just all over the floor. And maybe there's many clipboards or kind of rudimentary tracking systems by computer. And it's become really a logistical problem, not only keeping track of them, knowing which specimen is where, hoping the labels don't fall off, things of that sort. But we've seen in the past few years laboratory failures and putting the wrong specimen with the wrong patient. And these should be never events. 21st century technology, this should never be happening. So one of the bottlenecks was simply dealing with this kind of supply chain logistics of thousands to 10,000s to hundreds of thousands to now millions of specimens, every one of which is dear and really requires very, very high level care. So using robotics, using very high quality analytics and RFID tagging, we're now going after this problem. And this is good on all levels. It's good for patient safety. It's good for scaling up the field. Like imagine going from the 280,000 cycles a year to 1 million cycles a year, just how much that would increase the number of frozen samples that we had to deal with. So it was one of the areas that was thankfully more of an engineering than a science problem, but it's being tackled in a very high level way. Second area, an area that we're just trying to figure out is, we mentioned before using IVF to prevent genetic disease. Well, one of the bottlenecks there is, it's now cheap to get sequenced. We can get genetic information very, very cheaply and very easily. You and I could send our saliva samples off to a numerous number of companies, and for a relatively low amount of money, we can get sequenced, which is terrific. We can do the same thing with embryos. We're working on technology to do that with sperm. Really fabulous work. Problem is, the bottleneck there is taking that information, communicating it appropriately to the patients so that they and their clinicians can properly act upon it. And that's genetic counseling. In the United States, there's 1 genetic counselor for every 80,000 people. So we have the ability to reduce people's risks for serious genetic disease from, at times 50% to 0. Just incredible technology. But in order to put it into place, we need to widen the bottleneck through the genetic counseling part. And that's something we're trying to work on. And these are things that oftentimes need not only manpower and know-how, they need technology. So that's kind of the two of the, when I first went out to raise a venture fund to do innovation in IVF, I had my list of 18. Now that list is up to 24. And a year from now, if you're kind enough to have me back to talk again, that list will probably be in the 30s. But that's the kind of thing we're trying to chip away at.
So it might be good to give a cursory definition of venture capital versus private equity, because
Yeah,
I hear the two used interchangeably in the field very often. I hear fertility doctors saying venture capital owned groups, and well, that's private equity. And I think even experts might disagree on the definition to some degree, and
sure.
also there's a Venn diagram where they overlap. But could we generally accept the definition private equity investing in existing business, typically for majority control, to either create more efficiencies or at least create more profit to sell at an upside 2 to 5 years later? Is that typically a good definition for private equity?
That's a better definition than the one I usually use.
Okay.
I get asked this a lot, and the simple answer I give is private equity is buying the lottery ticket after you know the numbers have won. Venture capital is buying the lottery ticket before you know what the winning numbers are going to be. So it's a very different investor profile, very different risk parameters, and they're both very important in terms of growing industries and growing businesses, but it's really the imprecision of the definitions aside in common use, it's really two very, very separate entities from a finance standpoint.
And venture capital is typically not taking a controlling stake in an operating role in the new venture. Is that usually the case?
It really depends. In biotechnology and pharmaceuticals, there's been a movement lately for some of the super highly specialized venture firms to do their own company formation. And they'll bring entrepreneurs in-house and incubate ideas and then go out and kind of launch the company to have other funders come in. The issue with venture capital is these are companies that normally are not making any money. They have no revenues or minimal revenues. And the product development cycle in some cases could be as long as a decade or more. So it's a very specialized type of company. Within the IVF world, we're still in a more traditional model of venture capital where you have an entrepreneur who is often self-funded or bootstrapped or friends and family funded in the very beginning, sometimes working out of their own garages, literally. I've seen groups that work out of basements and whatever space they can have, and then they try to attract highly risk tolerant investors to come in and buy usually large stakes of the company, but having only an advisory role. Most of the companies that I've been investing in, I do speak IVF and I do speak finance. So I'll often join the board of directors or join the advisory boards and try to be helpful, but in an arm's length way. I don't get my hands dirty.
Sure.
I'm not doing the experiments. I'm not, but I too try to be somewhat active in it. The control really depends on the individual company, how much money they need and how much they're willing to seed. We as investors need to be careful to keep the founders and the entrepreneurs incentivized to really keep pushing and living the dream of this company. So we, in an early stage, we don't really want to take financial control or take a majority interest, because these companies will often go through serial rounds of dilution, and you don't want the entrepreneur, the founder, just being like shut out by the time it becomes profitable. But you're correct to say that in venture we usually don't take controlling interest, but it can be still a very large interest.
Okay. So private equity generally purchasing something that's already making money, venture capital typically trying to start and scale something that has not yet made money or maybe has made little money and really bring it to scale. I heard you say once at a conference that relative to our size, there's far less VC in fertility than there is in other subspecialties like oncology. Am I understanding that correctly? And can you give the specifics?
Very much so. VC in fertility is almost non-existent. There is some crossover to technology. What's generally called the femtech area often bleeds into fertility. Talking about your Venn diagrams, there's a lot of really fabulous entrepreneurs, many of them young women, which is terrific, doing work in women's health, taking technology to various aspects of women's health, including fertility. But in general, the hundreds of millions to billions of dollars that you see in oncology and in some of the other areas that in biotechnology just dwarfs anything that we do. And there's an entire infrastructure of specialized venture firms, specialized bankers. There's a real pipeline. When you come with an idea, that if this idea resonates with certainly the right group of people in that pipeline, it's a very well-paved road. In the fertility side, it's very, very spotty. It's the way oncology was 15 years ago. There's a bunch of reasons for that. One is that it's easier to generate the types of data in oncology that resonates with the investor community, and it's easier to model financially where these companies can go. But the truth is, and you alluded to this before, in oncology, we have 15 million people with cancer in the United States. We have about 7 million people with infertility. Oncology attracts tens of billions of dollars of innovation capital to looking for treatments for oncology. And fertility is just a tiny fraction of that. It's in the low digit millions. And people will say, oh, that's cancer and people die of cancer. But anyone listening to this podcast knows just how kind of life-stopping infertility can be. It's not a trivial matter. It's an incredibly life-altering event. And there's no reason. One of our jobs as entrepreneurs and people that want to grow the industry is to grow that financing apparatus, and that's something we're working to do.
So I still don't understand why it's so nascent, but also why is it not more involved in the practice model or the clinic model? And what you're talking about is creating efficiencies in technology and in the lab and with tank storage and what we're going to talk about artificial intelligence. But could VC also be applied to the practice model, where right now private equity is purchasing practices mostly using the existing model, making some efficiencies here and there? Couldn't venture capital be used to launch a new practice model? And perhaps that's part of what Kindbody is doing. But we've had Dr. Robert Kiltz on the show a couple of times, and we've had Dr. Mark Amels on the show to talk about their models. And I think, isn't there a way to scale this where you're creating a new model where you have one REI for 800 people or 800 cycles, but you've got a multitude of IVF coordinators, you have a multitude of ultrasound techs, and you have advanced providers doing things like IUIs and retrievals? And isn't there, is there, why hasn't VC come in to create a model that can get more cycles in?
Oh, I love the question, and I like to put the word "yet" in there, because one of my kind of dreams for as we scale this all up is I would love to create and you may be too young to know this reference, but I'd like to create a Bell Labs for fertility. Bell Labs is something that came out of back when AT&T was the only phone company. They funded essentially was like an engineering think tank where they just tackled one idea and one problem after another and put them out into the world and saw how it worked. I would absolutely love to create a well-funded 20,000 cycle a year facility where we would treat patients, and obviously had to be the highest level of medical care we could. And we did our work in step-by-step fashion and tried to figure out what worked, what didn't, and start expanding the types of patients that have access to IVF. Now, this would likely be a very different patient experience than exists now. And the patient experience right now, let's be honest, IVF is always terrible from the patient standpoint. It's a horrible thing to go through. However, the practices that I've known well, and by and large, I think it's not because people don't want to make it as comfortable as possible for patients, and it's a very patient-centric industry. But if we're going to do that next million cycles for minimal out-of-pocket cost to the patients, and if we're going to find 5 or 6 million cycles for China and the next several million cycles for Europe and other areas of the world, it's likely to be a very different patient experience. But that, it doesn't necessarily mean that the outcome likelihood has to be any lower. I'd love to see models where we can create a very low cost model, much lower hand-to-hand touch, but some alternative method for it. And at the end of the day, the patients have the same likelihood of having a healthy baby that they would from the existing model. And I don't necessarily see this competing with the industry now. It's a kind of it's an industry alongside it. You've probably heard me use the hotel example over and over and over again, which I do. It's like IVF right now it's kind of a Ritz-Carlton Four Seasons model, where for $1,000 or $1,200 a night, you get a wonderful night's sleep in a beautiful setting. And we need to build the Hiltons and the Sheratons and the Holiday Inns where you still get a good 8 hours of sleep in maybe a little bit more Spartan, but still clean and well-run and well-managed setting. We need that in IVF. And I would love to take a, X number of millions of dollars and build a prototype for that. It's not an easy amount of money to come by to attract investors, but in the times when I sit there drawing things out and saying, what if we did this, what if we did this, what if we did that, that's certainly something I'd love to see happen. Getting from idea to tangibly putting it on the ground is not simple, but I would love to see sometime in the next 5 to 10 years where we have that. And that could be a springboard to using innovation capital or venture type risk capital for the type of more patient-centric rather than tech-centric building. But ultimately, these things are going to converge. And maybe by the year 2030, we're going to have 1.5 million high-quality, low out-of-pocket cost IVF cycles in the United States that still feed an extremely vibrant industry.
To talk more about why venture capital has not entered the fertility field, you gave some reasons. I still am not totally understanding why not yet. So please talk a little bit more about it, because I really want to understand.
Sure. Well, think about investing in general. It's like you go to what Warren Buffett does, the value investors. What they do is they look how much cash a company generates in a given year. They turn it into a savings bond or a lottery ticket type equation. And in a very rational, mathematics-driven way, they say, okay, that cash flow is worth X dollars to me now. And that's how I'm going to invest in it. Very rational, very, unemotional. It's a great investing model. Now, move back as you kind of take stepwise risk and say, okay, well, let's say we can't define that cash flow, or let's say it's not a very well-run industry, or the industry has tremendous competition, or it's one that's very volatile. Then it's a much higher risk tolerance. So Warren Buffett's not going to invest in those things. You've got a different type of investor. You've got a more risk-tolerant investor. And then you get to higher risk things where, let's say you're not making money at all. That's where the venture world invests in companies that are not making any money or have no revenue. They don't want to do irrational investing. They still want to bring a discipline to what they do. So they want to do a different type of risk mitigation. We talked before about oncology attracting tens of billions of dollars of risk capital. That's because in venture capital in oncology, you can actually model out with a pretty good degree of certainty and discipline the likelihood of how much money that is ultimately going to bring back to you. Now, the revenue may not come for 2 years, 5 years, or 10 years, but we've done oncology drug development over and over and over and over again. We can apply risk metrics in a very disciplined way using predictive analytics, using statistics, using our knowledge of epidemiology, our knowledge of the number of patients for given entities, so that the venture capitalists can put together a portfolio of risk mitigated things, so that they can feel comfortable that they're not just throwing darts at the wall.
Okay.
In IVF, we don't have those metrics yet. It's one of the areas that we really need to flesh out, so that when I go out to raise a venture capital fund aimed at IVF, and I start talking to the high net worth investors, the pension funds, the people that put money into the well-known venture capital funds, they'll say to me, okay, well, what's your risk management strategy? And you're going to expect the same type of well-known numbers that we can plug into models that have been used over and over and over again in investing in drug development. And I can't do that. I don't have those numbers yet. IVF is still very much, you and I have talked about this, that each lab, no matter how high functioning, they have their own way of doing things. Their data management has been much more rudimentary than in drug development labs and in the biotechnology industry. So I go to these investors, I say, well, here's the opportunity, 7 million untreated people within, it's like, look at the ability we have to grow this industry from $5 billion to maybe $50 billion over a few decades. They love that. But the risk mitigation that these professional investors have, we don't have the inputs yet to make them comfortable enough for venture investing. We have it for private equity investing, because that comes from just good accounting.
Yeah, P&L.
It's like that's a pretty straightforward process. So it's a work in progress. A few years ago, I talked about venture investing in the IVF world, and people just didn't want to hear it. One of the reasons we wanted to do the first fund and keep it relatively small was just a proof of concept. Let's show we can do it. And go out in maybe this next year, this next 18 months, and say, okay, we showed we can do it. Let's build on that. And hopefully 5 years from now, there'll be a number of well-functioning, high-functioning name brand IVF venture vehicles that'll start doing for our part of the healthcare world what's been done in oncology and inflammation and some of the other areas.
Are we in a catch-22 then, David? Are we missing the funding of the chicken that would provide for the egg that might be solutions that provide us with data that allow you to have those metrics to paint the risk mitigation picture, like using artificial intelligence to get some of that data? Are we in a catch-22 where you need the funding to be able to get better data and vice versa?
Well, it's our job not to make it a catch-22. So it really is our job to pick out those projects that can be really a proof of concept, to show that, okay, let's stratify the needs within the industry and start picking off the highest value ones, showing there are businesses within them. Because each business we put into place, each time we take one of these analog pattern recognition artisanal processes and replace it with a data-driven and data-generating alternative, we make it easier to isolate and define the next one that we need to tick off. And ultimately, we're going to reach critical mass where, okay, we'll be able to, using the same type of analytics that the oncology industry uses to prove their value proposition, and we'll be able to do the same thing. But it's that's the challenge now. That's frankly what makes it a great thing to be tackling. And at this stage, we can make the incremental investor coming in to reproductive medicine can potentially have a much greater influence than the incremental investor coming in oncology. Which is not to say that oncology doesn't remain a terrific area for investment. It does. But when you're spreading out you're triaging your capital within healthcare innovation. It's our job to prove that a lot of that capital should be flowing into reproductive medicine. And that's what we're doing now. So we're in the early stages. And if it's a chicken and an egg issue, it's our job to create the chicken and create the egg.
Yeah, I suppose that might be a good summary of responsibility for the role of the entrepreneur.
Yeah, we like eggs in reproductive medicine too. Yeah, seriously.
So you have 24 companies that your fund is invested in at the moment. You have 24 companies.
No. I'm being misleading if I can. Right, the fund one made 4 investments, 4 very well targeted investments. We have now 24 bottlenecks in my grand list of things and problems that I need to solve the big problem, and we're just trying to pick them off one after another. That list grows, and sometimes some of the things that we thought were 2 problems turn out to be 1. It's a dynamic thing, but I would love to be in the position where I'm invested in every one of those solutions. But it's incremental. We're starting from the beginning, and that's okay.
So there's a lot. So if there's 24 and you made 4 investments in the first fund, then there's a lot that you don't like. You don't like it enough to be able to invest in it at that point. How does artificial intelligence perhaps factor into what you do like to invest in, or help you start to peel away the bottlenecks so that you can actually invest?
Great question. Well, the easier that we can make it, that any outside observer can see unequivocally what the value proposition of any intervention is, then the easier it is to push something along. So artificial intelligence is, in its purest sense, it sees things that we don't as humans. It's smarter than we are. It is able to crunch more data. It's able to assess inputs that we just don't have the capacity to do. You can take, artificial intelligence has visualization abilities that we don't. You take defense technology off the shelf that's used to scan meteorology or satellites, things of that sort, and you apply it to the ability to assess the dynamics of embryo development or embryo appearance or eggs or gene expression in sperm. There's no way that we're going to be able to do that just watching. And then we use those capabilities to get a better outcome. Okay, let's plug it in and see how much better we can do in the dollars per baby and time to baby calculations that really fuel all of the throughput through IVF. So in that way, artificial intelligence can be terrific. Now, the challenge for artificial intelligence, and this is a conversation I've had with so many entrepreneurs who are doing brilliant work, is we need to be able to show that it's the artificial intelligence that fueled the difference in outcome. And this is where we get down to something that I call the IVF data problem. With IVF, there's a small number of things that we know how to measure. Number of eggs, fertilization percent, percentage that goes to blast, the genetics of the embryo, and then pregnancy. And pregnancy you can break down to pregnancy and then ongoing pregnancy. There are so many confounding variables in between all of those that it's difficult to isolate any particular one in order to show that a given intervention made a difference. You look at the 2 things that were adopted most quickly over the past few decades in IVF, ICSI and pre-implantation genetics. ICSI was great because you had an intervention and immediately you had an answer as to whether it made a difference. And I remember in 1992 when we started doing ICSI, we had these entire populations of people that we never helped before, that suddenly it became routine. For one day it was impossible, then it became a miracle, and then it became mundane. It was just beautiful. It was very, very rapid innovation because we could see we went from no fertilization to fertilization. It was terrific. With pre-implantation genetics, it was a little bit slower, but in the best of cases, things like balanced translocations resulting in habitual pregnancy loss. We went from no normal embryos to normal embryos, no ongoing pregnancies to ongoing pregnancies. So we could match up very quickly the intervention to the outcome. With the innovations that we're doing now, since we have these small number of things to measure, an engineer will come to me with a brilliant piece of engineering and say, okay, we're so much better at predicting which embryos should go back, for example, or which eggs will, with fertilized with ICSI or fertilized normally, turn into blast. And that's a great piece of knowledge. But then we ask ourselves, well, is it a business? If we're going to make it a business, how do I translate that extra input into lower dollars per baby or shorter time to baby? And that's the challenge I give the entrepreneurs as they come to me. And we try to work these things through. And it may mean that we have to string some of these innovations together before we can do the type of clinical trial that'll pass what we call the so what test. When we walk into an IVF center and talk to the head of embryology and the doctors, and they say, we get it. You have me at hello. I can provide better care here. Or for the same amount of throughput, same amount of doctor hours, embryology hours, I can see that many more patients because I'm getting that many more people pregnant faster. We've got to walk it through those various steps. And it's challenging in IVF. Doesn't mean we can't do it. And the great
one of the
thing
challenges that is a common challenge you see among your entrepreneurs, not knowing exactly how the pricing will work. I've seen entrepreneurs really struggle with, okay, so we have a solution, we have an AI solution. Do we charge a licensing fee? Do we charge a licensing fee by clinic, by volume, by doctor? Do we do a per case price? Do we try to not go the clinic side and offer this as an add-on to that patients could opt for, and it would be passed on to the patient as opposed to being incurred by the practice who would then ostensibly raise their IVF cost or not, depending on how it affected productivity and outcome. Is this how to price and who pays for it a common challenge you see among your entrepreneurs?
Oh, absolutely. This is one that you and I could spend a whole day talking about. Because pricing is such a hot issue, and it should be. It's important because we're triaging resources. What I challenge the entrepreneurs to do is to specifically define your value proposition as best you can. And then we can figure out the best way to, who's best in the position to shoulder that risk. In many cases, if we show that something is universally helpful, then the IVF clinics can, in all good faith and in a very patient-centric and patient-helpful way, just adopt it uniformly and raise the price of their cycle a little bit, because ultimately the cost to the cost of having a baby is lower. If we haven't stratified, if we can only demonstrate that it helps a certain number of patients, then we need to say, okay, well, let's define who we're helping and how much, and then again we can make a rational decision as to who should bear the cost. Because if only helping a certain percentage of the patients we can decide who it is, then maybe we're best off charging that as, I hate this term add-on because it's such a controversial term, but if it's a rational distribution of these costs in a way that ultimately helps the patient, then we should be able to run it through a financial model and say, okay, here's the best market, here's the best way to market this. The same thing the way things are done in the tech world, the same way that things are done in the consumer discretionary world. Pricing is just one more part of the distribution model, which comes down to who's benefiting and who wants to pay that, who wants to buy that incremental benefit. And once we start defining these midway endpoints, so we can define the value proposition, then it becomes a lot less a question of who's being exploited or an arbitrary, who's making an arbitrary decision to just dump the cost on the patient or eat the cost as a practitioner. And it becomes just much more of a hands and arm's distance kind of rational. It's like, all right, well, this is pretty straightforward. Here's who we're helping. Here's the quantification of that help. And let's just do it in a way that that's fair for everybody.
straightforward if the value proposition is really compelling. And it
Right.
seems that, of course, this is every entrepreneur and every commercial venture's challenge, but having a truly compelling value proposition, because if it's not, there is not more room to just start to providers already feel like, oh, this employer benefits company's taking 15%, United or Aetna is holding us over the coals now and have dropped their reimbursements, and where are we just adding this on as a add-on if we're talking about PGT, and in the case of the patients, they're already just
Yeah.
saddled with cost after cost. So the value proposition has to be really compelling.
Exactly. You're preaching to the choir, because this is, when you said before, there are things I don't invest in. And I tell them it's the same way in my biotech fund that I've been running for years. Is I tell the companies that come in, I say, I love what you're doing, but I'm investing, I'm not writing grants, and I can't invest in science projects. And I challenge the entrepreneurs in IVF. It's like, show me and prove to me that this is a real product with a market rather than just an engineering exercise. Because the engineering is always outstanding. And I love the engineers because they're so passionate about what they do. And frankly, they're so good at what they do. But translating that into, okay, how much are we saving the patients? How much better are we going to do for those, 7 million or 6.9 million people that aren't being treated, to get them into the fold? And, and it's a challenge. And what's great is so many of them, and this is just an engineering mentality, they say, okay, well, that's one more problem to solve. I'm going to get back to it and I'll get back to you. And that's the kind of energy that we're injecting into the IVF engineering world, which is I'll tell you, it's not a group that gets a lot of attention. These are incredibly impressive people.
So the number of funds that you've invested in is much smaller, maybe 1/6 of the potential problems that you could invest in. What are those that either that you have invested in or plan to, hope to in the next 18 months? What are some of the value propositions that they aim to solve? Talk a little bit more about that.
Okay. Well, just as a correction, you said the number of funds I've invested in. I invest in individual companies.
One fund, 4 companies. Is that right?
Individual companies, right?
Yeah.
So, we've invested in, we talked about cryostorage, which has been terrific. We are investing in a company that's doing kind of biotech work and target discovery in women's health. People you may have heard of the company Telemedicine. This is a company that was putting together a fabulous data asset for a long period of time. And, it did not find its place in the market, despite the quality of the engineering work and the information technology world being outstanding. They pivoted over to target identification in therapeutics. And in women's health, similar to the fact we don't have too many targets and things we know how to measure in fertility, that goes all the way to women's health. You look at the diagnoses we have in women's health, preterm labor, preeclampsia, premenstrual syndrome, even infertility. These are observations. These are not molecular level diagnoses. And our understanding of women's physiology and endocrinology, it's been the same hormonal pathway for 50 years. No one is expanding on it except for this company. So talk about digitalizing a process to be able to prove interim endpoints that make a difference. And, I was incredibly impressed by the scientific work they're doing. Relatively early stage, but this is they kind of own this little area of the marketplace. We're looking at hormonal testing, alternate means of delivering that portion of the IVF cycle that involves doing one after another blood test for hormonal testing. Incredibly inconvenient for the patients themselves. Extremely big infrastructure that the centers in one way or another have to set up. Phlebotomists, blood drawing, running the tests, communicating the results back and forth. This is really kind of busy work that costs the cycles, an incredible amount of effort and time, nursing energy, inconvenience to the patients, but still has to be done to provide a good cycle. We're investing in a very novel way of doing this, that should, as it unfolds, completely streamline this process, and also moves into other areas within women's health. We're also looking at, we talked before about genetic counseling and trying to scale that in a tech way. This was pardon me if you hear the dog making noise behind. We're looking very carefully at telemedicine and its relatives, different ways of propagating and leveraging a small population of genetic counselors, and along the same lines, fertility practitioners, embryologists, in ways that lets them expand beyond the borders of their four walls, or even beyond satellite clinics. Let's leverage the cloud in ways that let us bring technology, let us take what the limiting factors are, whether it's labor, whether it's bottlenecks in interpreting information, and let's expand that. Yes, those are four fairly broad brushstrokes, but those are some of the areas that we're looking at. In some cases, they are direct attacks on the specific bottlenecks, for example, the cryostorage. In others, they are the enabling technology that we're trying to put together so that we can attack some of these other bottlenecks. And everybody always asks me, okay, well, list the bottlenecks for me. And I can't do that because that's the basis by which I go out and I attract investors. So they don't want me going out and telling the world. But it's really kind of taking our insider knowledge of the industry and putting it to work to try to pave that road so we can start attracting those tens of billions of dollars of innovation capital to our area of healthcare, the same way it's going to other areas.
In the last example you gave of telemedicine, how much has COVID and the restrictions that were relaxed in COVID either accelerated that initiative or changed the landscape? Before, if you practiced medicine in Illinois, if I'm not mistaken, and you wanted to see someone in Indiana or Iowa or anyone in a neighboring state, even if they were, we could say we're in Buffalo, New York, and just talking about Erie, Pennsylvania, that if they see the patient in their physical office, well, they don't need a license to practice in Pennsylvania, but if they see that same patient via telemedicine, they would normally need a Pennsylvania license, if I'm not mistaken. And then you have, through the enforcement of OCR and HHS in HIPAA, it had to be on a certain number of platforms or specific platforms. Those restrictions were laxed when COVID happened, to the point where it said, if you want to FaceTime, you can reimburse for it. If you want to do Zoom or non-secure platforms, you can. How much of, when something like that happens, how much does it change you're out to solve this problem anyway, and then this either throws a wrench in or it douses gasoline on the fire to make it better? Talk about how things like that can change the landscape.
Yeah, no, it's well, you've been very on top of how COVID has affected the fertility industry. You've so well covered a number of times what's been going on there. What is, obviously COVID is just a 100% awful thing, and it sucks that we have to go through this. On the same hand, it has brought to everyone's attention that there's some really built-in inefficiencies to our delivery of healthcare that certainly filter into the delivery of healthcare in the fertility world that need to be knocked down and that anybody could see. It's like one of our companies, a company called MedAnswers, which does physician counseling online, does genetic counseling online, clinical trial recruitment, all sorts of things that, and there's a lot of well-meaning regulation in place, and there's also a lot of not so well-meaning use of misunderstood regulations like HIPAA that people use to kind of get in the way of the delivery of patient care. You have something like COVID come along where we have to close up offices and keep people quarantined and keep people distanced and things like that, where an obvious answer is remote care. And suddenly it's a lot easier to go to regulatory bodies or whoever else is throwing up these barriers and say, hey, what gives? We want to provide good care. You are regulating our providing good care, and yet you're providing, here where we most need it. You got to start addressing these things. Let's put this at the top of the agenda. So it's been very important that way. Similarly, we talked before about alternative hormonal testing, things of that sort. A little company called UVA, which has got a technology that goes beyond just lines on a pea stick, and starts quantifying things. I know the clinic owners I've talked to, they want to keep seeing patients, and the patients want to keep being seen, but they want to do it where they don't go see the patient, they go into the office less. So in a way, it has accelerated the recognition that these alternate versions of providing care are better versions of providing care in many cases. So it's, I will never say the pandemic was a good thing. It sucks. I hate that it ever came. And it's like, if I could wave my magic wand and make it go away tomorrow, I would. But in the same way, crisis comes along, it does magnify some of the inefficiencies that are holding up the marketplace. And if our goal, you and me, is 1 million new cycles in the US and 5 million new in China and 15 million more cycles a year in the world, let's start knocking those barriers down. And if it takes a crisis elsewhere in healthcare to demonstrate the need to do that, all right, let's point to that as a reason for it.
It's certainly been a catalyst. David, I'll let you decide how you want to conclude. We can conclude with your thoughts on artificial intelligence or venture capital. You can use this as a plug if you'd like to invite some high net worth people to participate in your next fund. I'll let you decide how you'd like to conclude.
I'm going to conclude as a plug for what you're doing. This is, you have provided an extremely unique serial view of a tremendous number of people into this industry that really nobody else is doing. And I think that anyone interested in the type of stuff I'm doing is really best served by tuning in every Tuesday. You drop a new episode every Tuesday. It's like you're on you're frequent on my playlist. So let's conclude it by plugging what you're doing. And again, thank you for bringing me on.
Well, that's very generous for parting thoughts. And good thing you said it too, because the audience is likely skeptical that I could pay you to say it. So I appreciate you giving me that plug. And as Inside Reproductive Health becomes more of a platform, perhaps the same guest contributor role that you play in other publications, we might one day be able to make that happen for Inside Reproductive Health. So we'll certainly have you back next year when the numbers of issues that your fund is looking to solve is somewhere in the 30s. And we'll be happy to have you back. Thanks so much for coming back on, Dr. Sable.
Always a pleasure, Griffin. Thank you.